Good morning, traders. This is Chris Keene, and this is the wake up call. Let's get a look at and see what we have heading into today's price action in New York. It looks like the Dows are favored to be up just a little bit, plus 14. I think the S&P futures are up 1.5. Nasdaq's up plus 5. We have a little bit of action today with the release of the Canadian GDP and New York ISM. But all in all, we have a slow day of data once again today. And except for the release, which actually will be tomorrow and early Wednesday trading, we have another Australian release. We have the Australian GDP report release, which could cause a little bit of price action, a little bit of volatility in that pair. Let's start out with the Aussie because they were the big talk of the town last night. You can see that the Aussie... the Reserve Bank of Australia decided to keep interest rates go with the 25% basis point reduction, and initially that made the pair move lower. But then, with more commentary that followed, the central banker, I believe his name was Stevens, he went on to say that he believes that they're still waiting for the existing rate cuts to cycle through the system, and that in the near future they might hold off on future action. And this has made the pair move up, but it wasn't a clear-cut decision, a clear-cut move. You can see that the cost moved up higher right after the news, and then all the way up until about midnight Eastern time, the pair was continuing to move lower, and I really wasn't expecting much of a follow through. And it wasn't a dramatic follow through, anyways. But the pair is up about 35 pips from that level. But if we look on a longer term chart, you can see this basically reneges the move lower here. The what we were trying to get the short break of the trend line. But let's draw the trend line on a larger perspective and see if maybe we are running up onto that trend line right now. It doesn't look like we are, because it could act as resistance on the backside. Could act for support turned into resistance. Let's see. Let's just run the line real quick, and that is what's happening. So you can see that the pair moved right up to that trend line, and it's found a bit of resistance right there. And the problem with the euro, jumping in the euro trade, there is a lot of resistance stacked right here, right now. If you can see, obviously we have the trend line resistance that we were just talking about that they've managed to break below, but you also have daily price resistance here at 104.85. And if we move the time frame to a higher degree, you can see there's just basically a price action resistance stacked between 104.85 and 105.20. Now let's go to a daily chart, and you can see there's even more right there. On the daily chart, we can have with this descending trend line here that has capped the price action going all the way back for over a year. You can see that the pair has bounced off this level once, twice, and maybe preparing to bounce off it for a third time, and that comes up basically right around 105.20 also, so at 105.30 level. So the pair would have to break through this level to get things going to make any move up to 106. So I don't like the odds of a breakthrough there, just because of the amount of, well, the odds of the breakthrough don't change because of what was there. It's just there's a lot of resistance it has to get to. And the other problem with the pair is that now it's firmly back into its consolidation zone from last week between 104.85 and 104.35. And so to rehash, we have support here, resistance here at 104.85, 105.20, and about 105.30. So there's a lot stacked up there. But if we do get a bounce off this level and head back down, we could just be playing this for a rebound up to the trend line resistance and look for a move back lower. That's a more favorable trade, but if the fundamentals don't seem to be pointing in that direction, so we'll have to keep our eye on that. Next pair we're going to watch is the Euro USD, because as we all know, the pair did break above on in early Sunday trading of the 103.20 resistance level. And it has remained above that level and has slowly drifted higher, and now we're sitting right about mid-range at 103.77. Right now we have resistance that starts around, let's go on a longer turn here, resistance that starts right around 131.20, or more accurately, I don't know why, 131.40 is where resistance seems to be starting. And that level also has a next level of resistance right above. So basically resistance is stacked between 131.40 and 131.78. So this is going to be a strong resistance zone right here, and it's going to have to break below that, above that zone to shake it and make another move up to the next level. Will be 132.80. If we look through this pair on a daily chart, you can see that it has been moving up quite. This would be the 5th day in a row, but if it moves up to the 131.80 level, it has totally retraced the move lower, the advanced higher. It'd be testing the highs of that, and a break above that would put us in position to break to new highs at 132.80, 133.80, 135, and so forth. Next pair we're going to look at is the Great Britain USD, because you can see that pair is definitely sitting mid-range after breaking out of the tight congestion range that it spent the majority of last weekend. And above 160.50, the pair has been moving up. It's up almost 60 pips from there, and now it's basically sitting mid-range. It has strong resistance between 160, 180, and 162, so it could find a little bit of trouble there. And you can see it did bounce like clockwork last week on this ascending trend line. Let's draw that again. I don't like the way that looks. If we go right from the bottoms of these moves, it pretty much just followed the trend line all the way 100%, and that looks like it might be a difficult egg to crack, but of course it's not going to go up forever. And I would expect that the pair might consolidate here, and we might see another pushback down lower to the trend line around 160.27, which actually is almost 100 pips away at this point. So we'll have to watch that, and there could be a good opportunity to go short on that pair in the meantime. Or if we get up to 161.80, it could be an opportunity to go short there. But right now the pair is sitting mid-range, and the only thing you can do is really stand aside. Now the New Zealand USD bounced once again off the 82 level. 82 level, but it still hasn't broken above the top at 81.70. Basically what I would look for in this pair is maybe move up to the 83 area as an opportunity to go short, looking for a move lower. And but it's still in its larger range between 83 and 81, and basically 82 is acting as the pivot. I mean, there could be an opportunity if you wanted to. You could have gone long, but right now it's going to run into resistance right here at 82.70. So until the pair gets up to 83 or down to 81, or we see a break of these lows around 81.70, looking for a push down to 81, the only thing to really do is to sit on the sidelines in that pair right now. The USD CAD, as you can see, is still in this consolidation zone, and it can't seem to break above the 99.50, so it's just going in between 99.50 and 99 until we get a break of that range. There's really nothing you can do in that pair. And the same with the yen, is consolidating like we predicted it would, just basically after its aggressive move higher from 79.50 all the way up to 82.82. The pair has been consolidating in the sideways fashion since that point, and we would need a break of either this 81.80 level, 81.90 level, excuse me, or 81.85 level. I'd like to see a break of that, and then we get a push down towards this support zone between 81 and 80.60, or a break at the 83.20 level would favor a continued move higher. Let's look at some of the yen pairs real quick. You can see the Euro JPY almost looks like it's died, still in that tight resistance zone between 107.50 and 107. The Great Britain pound still testing resistance up at 132. You could go short there with stops above the highs, looking for a move back down to 129.60. New Zealand still in this range. It's really flatlining now, consolidating. It looks like it could be a triangle there if we focus in. And there probably is a short-term triangle, but I don't know what kind of momentum you get on that. I would just wait for a move at 68 or 67. And the CAD JPY is just sitting up near resistance at 83 here. It has moved down like 60 pips in the short term, but a continued move lower does favor a move all the way down to the 81 level. And I guess we'll look at the Aussie JPY. You can see it's just moving sideways right here. And now you'd have to move your resistance up to about the 86.40 level. So you look for consolidation between the 86.40 and 85. There's really nothing you can do there. So the pairs of interest today are the Aussie to see if it has continued move and watch all this resistance, maybe for a move back lower. The Euro just watching it sitting mid-range. Same with the pound. We can see if this has any legs and could go short, looking for a move down towards the trend line. And New Zealand, just watching the 82, 81 level, a larger range. The CAD, you have 99.50 level still in play. And just all the noise, basically the euro pairs are consolidating. All right, everybody, keep a lookout for the Twitter feed. Good luck trading. Time to make some pips.